Hello, welcome to the European Open Briefing for Wednesday, November the 2nd. I'm Rafik Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we have quite a bit of volatility in financial markets today, and that's mainly due to the fact that markets are becoming increasingly worried about the possibility of Donald Trump winning the US elections. We've seen Hillary Clinton's lead over Trump narrow in recent days, and this has put pressure on the US dollar, which has fallen below the 104 yen level. And this comes despite the fact that we had some strong ISM manufacturing data yesterday. The risk of appetite has boosted safe havens such as the Swiss franc, which has gained sharply versus the US dollar. The yen and gold are also up on the risk of sentiment. One of the surprise strong performers today is the New Zealand dollar. That's because we had a combination of an increase in dairy prices as well as strong employment data out of New Zealand. And also worth mentioning that oil has fallen to 1 month lows following an increase in US crude stocks according to API data yesterday. So let's begin with the US elections and the impact of the latest polls on the currency markets. The Mexican peso has fallen to a 3.5-week low, and this comes after a few days ago when the FBI announced that it has reopened its investigation into the use of private email server by Hillary Clinton, and this has apparently hurt her popularity among US voters. And we know that a Trump win is seen as negative for financial markets due to his policies, particularly his trade protectionism policies and anti-immigration stance. So Hillary Clinton is clearly the preferred favorite by financial markets, and the fact that she is sliding in the polls is hurting the Mexican peso and the Canadian dollar, which are both trade-sensitive countries because they rely on US trade for their economic performance. So let's have a quick look at some polls out there. We've got the RCP poll here, which is, we can see the narrowing lead Hillary Clinton over Donald Trump, quite compared to a week or two ago. There's been a sharp narrowing in the gap between Clinton and Trump, and also in the FT poll here you can see Hillary Clinton's lead has fallen to just 2 points ahead of Trump's, so it's quite a big difference over the past week or so, and that's obviously worrying financial markets. Let's have a look at some safe havens. We can see a big drop in the US dollar against the Swiss franc. It's down almost 2% since Monday and currently trading just above 0.97 francs. Gold has also gained because of the risk aversion. It's up at around 4-week high, and it's fast approaching $1,300 an ounce. Against the yen, we can see the dollar has fallen below the 104 level. It's currently around 103.50 yen. We also have the FOMC meeting today. Let's not forget that, although we're not expecting any changes. We do expect to see some signaling of a potential rate increase in December. This is assuming, of course, that Donald Trump does not win the elections and we don't have any unexpected volatility in financial markets until then. The FOMC statement is due at 18 hours GMT. We had some fairly decent ISM manufacturing PMI data yesterday. It increased to 51.9 from 51.5 in October, beating expectations of 51.7. But markets are more concerned at the US elections right now, so that had very little impact on the dollar. Let's have a quick look at the dollar index. We can see that at the bottom, the dollar index has been sliding lower since yesterday. It's currently at 3-week low. The euro dollar is also doing well. The euro has been gaining on the back of the worries over the US elections, and it's currently at a 3-week high at above $1.10, and it's also approaching $1.11. While even sterling is doing fairly well. It's comfortably above $1.22. In other news today, we had building rules data out of Australia, which fell by 0.7% in September. That was much worse than expectations of a 3% drop. This has been weighing on the Aussie, but of course, the Aussie also is sensitive to risk sentiment in the market, so the risk off mood today is also weighing down on the Australian dollar. We can see yesterday when it rose sharply after the RBA announcement. And of course, strong Chinese data. It's since fallen quite sharply to around 0.7638 at the moment. Now, one of the strongest performers today is the New Zealand dollar. It's currently up around near 1.5-week highs. We had the bi-weekly global dairy auction yesterday, and that produced an increase in dairy prices of 11.4%. We know that New Zealand is dependent on dairy products, dairy exports, so that's obviously boosted the New Zealand dollar. But also we had some unemployment data out of New Zealand today, which the unemployment rate fell from 5.1% in the second quarter to 4.9% in the third quarter, and this put into question whether the Reserve Bank of New Zealand would cut interest rates at its November policy meeting. So the double boost of strong data has obviously boosted the Kiwi, and it's currently up at 0.7244. If we look at oil prices now, we had the API. This is the non-official inventories data for the United States. According to their data, US stocks rose by much more than expected last week, and that weighed on oil prices, and it's today at near 1 month's lows. We can see US crude oil prices currently just above $46 a barrel, and it looks to be on track for a fourth straight day of losses. Coming up later in the day, we have the inventory data from the US Energy Department, so that will also be watched to see what impact it's going to have on oil prices. Let's have a look at today's calendar before we wrap up. We can see the New Zealand jobs data there. We also had nationwide house prices out of the UK, which was slightly weaker than expected. We've got the final manufacturing PMI out of the Eurozone later, and we're going to have the construction PMI out of the UK. We had on Friday, of course, we have the non-farm payrolls report, but before then, the ADP employment report should provide some sort of a clue as to what to expect from the official payrolls data on Friday. That's due later in the day, and then of course we've got the FOMC meeting at 18 hours GMT, and then later in the evening or early tomorrow morning, depending on what time zone you're looking at, we've got the labour cost index out of New Zealand. So that's it from me. Thank you very much for watching, and have a great day.